Hello friends, this is Mayuresh Kulkarni. The purpose of making this video is to give you my learnings on how we can reduce the liability of capital gain tax on sale of shares. There are few learnings which I have got over a period of time. Just wanted to share it with you. Just to give you a perspective is like I want you to identify what is the capital gain tax liability that you have. Once you identify the capital gain tax liability, you just have to identify whether it is a short term or long term. What I want you to do is like to identify what is your liability. In case of a long term capital gain tax amount less than rupees 1 lakh, it is not taxable. But short term capital gain tax will still be taxable. So what I want you to do is to identify those shares which you have procured because you feel that those shares will add value to your portfolio. But as on today, the market value of those shares is lower than your purchase price due to multiple reasons that market might have come down or something of that sort. But then as on today, the value of those shares is lower than the purchase price. Secondly, you don't want to sell those shares as on today because you feel that those shares add value to your portfolio. So what you can do for taxation purpose is I will suggest you to sell it today and buy it tomorrow. So what will happen when you sell it today? The capital gain tax as per income tax is being calculated on a FIFO method, that is first in first out method. Something that comes first will go out first. So for the purpose of calculation of capital gain tax, you have to consider a first in and first out method. So all those shares which you have procured at a higher rate will go out first in this case, as you will be selling those shares first. And once you do it, effectively you will be booking capital loss for the current financial year. And as you will be booking capital loss, your capital liability will come down. This is not a method by which you can avoid taxes, but you can postpone the liability of taxes to multiple years ahead. And then over a period of time, you will get a benefit of indexation as well on the shares. But to give you a perspective, you have 8 to 10 days, that is till 31st of March. Once 31st of March is gone, you will not be able to do anything about it. So you have got 8 to 10 days. So just calculate what is your capital gain tax, whether it is a short term or a long term. If it is and as you calculate short term and long term, you also calculate which are the shares which I can sell. Book losses for the current year before the year ends, and then you can buy back those shares on subsequent working day. Don't do it on the same day because it will be treated as a speculation income. So you need to do it on subsequent day rather than doing it on the same working day. So you can buy it back on the subsequent day. So for next year onwards, your cost of those shares will be lower than what you have bought as on today. And you will also be able to avoid paying taxes in current financial year. You will postpone it to subsequent year. That's all, friend. I'm very happy to share my learnings on how to reduce liabilities for short-term as well as long-term capital gain taxes. And just check it out if it is useful for you. If it is useful, please implement, please save your taxes. Thank you.